Yo, what is going on today, NFT Bros podcast listeners? I am Adam, your host. Welcome back to the show. On today's episode, we have Mark with MHL Solutions on with us. Mark is a blockchain consulting service provider for founders and builders. He does tokenomics development, project analysis, and risk management. And on today's episode, we are going to dive into tokenomics, his views on them, explain a little bit about what they are, how they function, and hopefully you'll learn something new about tokenomics. Mark, it's amazing to have you on. Thank you for taking the time to show up and be here with us. Why don't you go ahead and just introduce yourself a little bit better than I did and tell the listeners kind of who you are and what you do.
Yeah, sure. First of all, thanks for having me here, Adam. It's a pleasure. I've been listening to some of your podcast and really love them. So congrats.
Thank you.
Introducing myself, I'm Mark. I'm a blockchain advisor. I've been in the space for 7 years. I started in 2015 when I was a minor, and I made myself through losing money, investing with friends, and making some experience in the space. And in the last years, I also started advising new investors coming in the Web3 space, in the blockchain space, and also project founders. And in almost 3 months ago, so on December 1st, I launched MHL Solutions, which basically provide blockchain consulting services. Among these services, as Adam said, we have tokenomics development, tokenomics analysis, project analysis. We also have private consultancy or long-term advisory with projects and teams. And also we have secondary services from our partners. We do have a lot of partners. I'm talking about 8 to 9 companies. Some of them are not official and we are still under negotiation right now. And other you can see them on my website. But these partners are all experts in their field. I'm talking about Web3 researchers, developers, full stack, Solidity. And what I basically do with my partners is try to get jobs and make them as much. Well, what we do is we aim for transparency, first of all. And second, what we want to deliver, it's not a job and get out of it, but we want to deliver an experience to our customer. Make sure that the customer understand what we did for them and make sure that our performance was well made, and we want our customer to be happy with what we do. So I decided to partner up with expert builders with a great background. Some of them are also friends of mine, and in the past month we became some sort of family.
Nice. That's awesome. I love building with friends. That's how Just Cube started, and that's how I'm continuing to develop our business partnerships and things moving forward. So that's awesome to hear. It's always a good time building with your friends and being able to, help impact not only their businesses, but yours simultaneously. Now, I do want to just dive right into tokenomics. It's something that I haven't researched a ton. I understand the basics, but if you could just explain to me like I'm 5, what the basics of tokenomics is.
Yeah. So tokenomics, when you see tokenomics, it's the same way as you can see fiat currencies. So I'm in Italy right now, so we use euro. So euro is macroeconomy, so it's something very, very big. Tokenomics are microeconomy, so basically you build a token for a specific use, for a specific project, okay? And in this case, the biggest and the most famous token is Ethereum. So you use Ethereum to pay gas fees on the chain. So every token has a specific utility related or not to a specific project. Tokenomics, as the term says, it's token economy. And so if we have to describe what tokenomics is, it's basically all these elements that put together forms the economy of a token. And what are these elements? Basically 2. One of them is the token metrics, which is the allocation, the distribution, and the emission. And then you have the token economy, which is basically the utility and the use cases. When it comes to token metrics, we have the token allocation, which, if I have to put it in simple word, it's basically the percentage of the token allocated to the team or the investor or the airdrop or the staking, whatever it is. The distribution and distribution mechanism, it's basically how you decide to distribute the token into the market. There are two of the most famous one is a token sale and staking. So you can have multiple distribution mechanisms or even just one. Example, Bitcoin, it's a fair launch because there was no token sale. So in order to get new Bitcoin, you have to mine them. Okay. And so that's the only way to get Bitcoin. And if Ethereum, you had a seed round, so a token sale. So people bought Ethereum with Bitcoin at the time. And also you could have mined them because it was proof of work, okay, before. And now you have to stake Ethereum in order to make other Ethereums, okay? And this is the distribution mechanism. Another distribution mechanism can be airdrops. So you mint the token and you just give it away. Another one would be farming. So you provide liquidity to the pool, and through that, through the LP token, you mint new coins. Well, technically, it's the contract that it's minting the coins. You just go and claim them. And then we have as another distribution mechanism, which is minting the token and putting them on a contract with a cliff and a vesting schedule. The cliff, it's basically time in which you as an investor are not going to get any token. Okay. And that could be, for example, 3 months. And if you joined, I don't know, a private round, for example, and you have a 3-month cliff, it means that for 3 months, you're not going to get any token. The vesting is something that you get periodically, X amount of token every month, every week, depending on the contract. And when it comes to the token emission, which is the last one, is basically you decide how many token to emit in the market through the contract of the token. So once you deploy your contract, you basically say, I want to mint every block 5 tokens. And so every Ethereum block, for example, which is every 12.09 seconds, you mint 5 tokens. Okay. And it can be minted. You can mint this token from the staking contract or another contract, depending on how you structure the token. So the emission, it's basically how many tokens you are emitting every block, every year, every month on the market. And that's very important also to predict selling pressure. And then we have the token economy. When it comes to the economy of the token, you can structure it in 2 ways. One is the token utility. So the utility of a token, it's basically why should I hold this token on my wallet? What is the reason to hold it? Example, very, very simple. Ethereum. I hold Ethereum on my wallet because I need to pay gas fees on Ethereum chain. So this is a utility. And then you have use cases. Use cases, it's not used anymore. It was used before Ethereum, for example, before the tokens, before the Web3 space, but it's kind of the same. The difference stands in how can I use this token? For what reason I use this token? Example, Bitcoin use cases is transaction, so moving money from another wallet to a wallet to another. So that's a medium of exchange. Okay, so the difference stands on why should I hold the token and how should I use this token. So you have utility and use cases. Once you decide for your token, or you see what the utility and the use case of this token is, you can then build what is called the ecosystem. The ecosystem, it's basically the system, the economical system of the token. So how the token is involved into your platform or into the chain.
Very interesting. I just learned probably 3 or 4 new things about tokenomics that I didn't know before. So, dude, that was an awesome explanation. For the listeners, I hope you guys were able to stay with us on that, because that was very interesting. If you did, attentively pay attention here and listen, There were some very interesting things that he touched on. And I did want to go into the tokenomics on Collabland and also on Blur and get your overall feedback on both of them, because it feels like right now we're just in this market of airdrops and token airdrops from these communities and or businesses to try and acquire more market share. And I will omit my feelings on it because I do want to hear yours, and then I'll bring mine in. But I would love to dive into either Blur or Collabland and your thoughts on those.
Yeah, sure thing. So they both, Blur and also Collabland, they both launched their tokens through airdrop. Airdrop is a distribution mechanism. So you mint the token and you allocate this token to your investors. So investors, to your, members. So for example, in this case, Blur, okay, in order to get the token, Blur token, you had to make transaction with NFTs, okay? So basically, trade NFTs or even just place an order, okay? And so you had to make volumes in order to get these tokens. And the point here is it's an airdrop. So every time you get an airdrop, you have to ask yourself, how much is it really worth it? Okay. And what is the utility of a token that is distributed with an airdrop? Okay. But before going through that, it is important to not forget that token economies works the same way as macroeconomies. Okay. It's just smaller. Okay. So if you think about it, okay, let's say you don't like bikes and I decide to give you a bike tomorrow. Okay. But you don't like it. Okay. So it's not for you. So even if it's a gift and you know you're not going to use it, the first thing you're going to do is sell it because you don't need it. So whenever 95% of people that get airdrop, they just liquidate the token because they don't really need that token. Okay. Collabland is going to make an airdrop if I'm not mistaken, in 2 days. Yeah, in 2 days. And the point is, this is a governance token. Okay, to enter the Collabland DAO. Okay, and I love Collabland. I've been using Collabland since the first day on Discord, and I really like the technology and the fact that you can use this bot to enter a community or just get a role or whatever it is. Okay, but I believe a token is useless in this case. So let's pretend I'm gonna get this airdrop. The first thing I will do is sell it because I know that if it's useless for me, which I understand the technology, is it going to be useful for another person that maybe are not going to understand the technology? So that person will sell for sure. Okay, so in order to make for myself some money, I'm gonna sell at the market. Okay, I'm not interested in getting the airdrop. Okay, so I will not even check if I get some token because I don't really care about it because I know how it works. Okay, and so you either are one of the first to get the token and sell it, or you're just gonna have a token that has already dumped by 90%, okay, in a couple of hours. So that's also the reason why I didn't like the Blur token in distribution, because it was an airdrop and the token price dumped for about 95% in a couple of hours. Okay, so it is kind of pointless. Okay, but the question is, do these teams or project know how this works? Sure, they do. They absolutely do know how it works. They do it because they have media influence over us, because they are big brands. If tomorrow I would be launching my token with an airdrop, nobody will buy it. You know what? People might think it's a scam. Okay, because an airdrop is either a scam or is free money from some big brands. Okay, and so I believe airdrops used as a distribution mechanism, and it is used as a distribution mechanism when you have like more than 2% of your total supply that is going in airdrop, okay, without vesting. So that's even worse, okay? And so this kind of tokenomics are kind of ruining the space, in my opinion, are also ruining the future of what I consider to be an art. So the art of developing token economies, okay? And I do not like them. Neither when I develop tokenomics, I never give an airdrop bigger than 1%, okay, of the total supply. And if it is 1%, it's going to be at least with 20 or even 30 months of vesting schedule, because it's free money. So if you want to collect this money for free, at least I want you to stay in the platform, join the community, and give something back, okay? Because if I'm giving you free money, you should give something back to the project.
Very interesting take. I am intrigued to know your thoughts and feelings on ApeCoin then, and how they did their distribution, and what their tokenomics look like.
Yeah. So I am not very familiar with it, and I'll tell you why. Because I believe, and don't get me wrong, neither you or the person who is listening right now, but the business model of Ape is rewarding Ape holders. So I'm talking about NFTs in this case. It is like always gifting to these people. So it looks like Yuga Labs, it's trying to milk the community, in my opinion, because if you see all their NFT collection, in order to get this NFT, you had to hold another NFT. So it was very centralized, if you think about it. And the day they launched ApeCoin, I thought, okay, that's not a scam, but it's like the ultimate milking way to the community. Okay, so I thought now the team is gonna milk a lot from them, and I have no idea what the tokenomics is, because I had no interest over it, for one simple reason. When I see a huge brand that it's not trying to expand the community base, so it's working only within the community, I don't really like it, because the purpose of a microeconomy is to expand, becoming an economy and then a macroeconomy. If you keep working only with your community, with 10,000 holders or even less, you're not going to expand the project. You're just going to milk your community. And what will happen most of the time is that not Ape owners, but people that are outside of the community that are buying the token, they are the one that gets screwed, because they want to be part of this amazing project. And so what they do is go and buy this Ape token, because now they can buy it, okay? But it was an airdrop. So a lot of Ape holder, they made a lot of money with it, okay? I like the fact that now you have to stake your Ape NFT in order to get Ape coins. That's cool, okay? It makes sense somehow. But if you use the airdrop as a first distribution mechanism, I don't even look at the tokenomics. I did it this time for Colorblind and Blur because it was asked for from a friend of mine, and that is it, okay? Because that's not what I like, and if I don't like something, I don't even lose time with it, because I believe I am pro-educating the Web3 investors, okay? And this kind of project, this kind of tokenomics are against the education of the investors. So instead of helping them to learn something about the economy or the industry, they are just giving away some NFTs or some tokens just to milk someone somewhere. And I don't really like that. So that's my take.
Okay, great. Well, then that leads perfectly into the next question that I had, which is what token drop and tokenomics ecosystem has been released that you like the best? Like whether it be from, a marketplace or an NFT project or, just a blockchain. What's been your favorite and why?
Yeah. So 99% of the tokenomics out there, I don't like them, because they are either copy paste or they are not working with the ecosystem of the project. Okay. And one of the best tokenomics I ever seen was the one from Supra Oracle. Supra Oracle, it's an oracle that is trying to compete with Chainlink. It is under development since 2017, and they're just launched it in this month in some chains, and it's having a huge success. Okay. What I didn't like about the tokenomics is that they wanted to raise $109 million. Okay. And that's a lot of money. So FDV in that case, the market cap was very, very high. Okay. And I don't really like that. I don't see a reason why a token size should be that. I don't see a reason why a project should need $100 million. Okay. When you have your project already developed. Okay. But that being said, I love the tokenomics. I spent something like 20 hours on it and reviewing it, and I really enjoyed it because it was well structured, and every allocation, every distribution, every vesting schedule was perfectly fitting the ecosystem and also the marketing of the project. And that was one of the best tokenomics I ever seen.
Very interesting. And so then, if that's the case, what is your most prideful tokenomics ecosystem that you have created yourself?
Yeah. Unfortunately, I cannot talk about it because
okay.
I was under NDA, so
Okay.
I cannot. I just can tell you that it's quite big. It's still online, and I'm very proud of it. Unfortunately, at the time, I got paid very like $5,000, but the project it's kind of huge now. Okay, it's not one of the most successful in that area. Okay, but it was a great tokenomics at the time. Now, if I have to analyze it right now, I would say some error, some mistakes I did. So that was almost 2 years ago. So
very interesting. And so this kind of brings me into another topic of tokens and token ecosystems, which is the gaming ecosystems.
Mm-hmm.
Do you have any that you're looking at that you're like, wow, I think this is really interesting what they're doing here to incentivize users to play the game? Do any play to earn mechanisms intrigue you, or do you see any play to earn games that are doing this really well?
Yeah, so that's a great question. The GameFi concept is provide to games some kind of economy behind it. Okay, the point is, do they really need an economy? Because at the end of the day, they are just games. So, do you really need an economy in the game? Something that makes sense from a financial perspective? You don't really, and that's also one of the reasons why it's very hard to onboard Web2 gamers in the Web3 gaming space, because for them it's not about earning or about having an economy in game, but more having fun. Now there are many projects working on the next AAA, AAA games, or how they call them right now, which they are not, by the way. But the point is, when it comes to economy, to in-game economy, you don't really need it, because it's just a game. People tend to jump from game to game. So in order to have a successful economy in game, you have to make sure that this user will keep playing your game. Okay. And if you make a tokenomics with a max supply, okay, you have to find then ways to burn the token in game, which is not really easy, but the most hardest part is the token volatility. Okay, and because you need an infrastructure that it's kind of backing up your token, you also need to make sure that players are going to play. Okay, and the worst thing about tokenomics in the gaming industry is that even though they are looking for gamers, tokenomics are more profitable for investors. If you have, I'm going to throw some number there, okay? If you have a 5% token sale, 10% play to earn reward, so by playing game you earn tokens, and then you have a 15% staking. Well, the question is, why should I play when I can stake and make more money? Because the allocation is bigger. So when you see games that have a bigger allocation for staking instead of play to earn, they are not really looking for gamers. They are looking for investors to raise the money. So you invest with them, you take the token, you stake the token, you make more token. Easy as that. And so tokenomics, I've been developing, if I'm not mistaken, 3 tokenomics for GameFi, and 2 of them were without the staking. One of them was without the token sale. Another one was with infinite supply. Another thing I don't like about GameFi is they try to build 2 tokens. One is the governance token or utility token, and the other one is the in-game token. The purpose of this is it's purely backhand, and from a contract perspective, it's easier to manage 2 tokens in this way instead of having the same token for 2 different purposes. One can be governance and the other one can be in-game, okay? But the point is you split liquidity in this way, because you need this token that they both have to be liquid. So instead of having $1 million worth of liquidity pool, you have 500 in one token, 500 in the other token. So they are more volatile. If you have one single token, your volatility is 2 times less because you have 2 times more of liquidity in the token. So that's also a huge mistake. But I believe this was a trend of a couple of months, and I do not see any other project doing 2 tokens for the GameFi. Yeah.
Yeah, I actually have been paying a lot more attention to the gaming ecosystem and tokens that are launching over there and how they're doing it. Surprisingly enough, before hopping on this episode, I have a buddy who is running a gaming project, and well, actually, I'm sorry I said project. It is not a project. This is a business. This is going to be around for a very long time. What he's doing is very interesting. And he's decided completely against going with any sort of token drop, which after doing a little bit of research, and especially after listening to what you've had to say, is likely the best route to go.
Yeah.
Especially considering something I spoke about with another friend of mine the other day, which is for a completely opposite discussion. But I did have a quick question. There is quite the controversy around the token called Hex. Have you looked at the tokenomics of Hex and like what it specifically is, what it does, how it operates, how it functions? Do you know anything about it?
No, I haven't. Is Hex the symbol, the name of
Hex.
the token, or?
Yeah. Yep. Hex is the name of the token. I'll share it with you here in Discord.
Yeah.
It's got quite the controversial opinion around it, and it's often been called like Ponzi-nomics and things like that. And I haven't dove deep enough into it to understand it at its core. I understand what a certificate of deposit is. They sell themselves as, Hex is a CD on the blockchain, right? Built on Ethereum. And so I understand that, but I haven't dove into the tokenomics on it and really sat down to try and understand it. And, I figured I'd ask you if you had
No,
looked
I
at that or found
haven't.
anything.
Yeah, I haven't, but looks like it's some sort of link with Bitcoin and Ethereum. So it is an ERC20 I see here, but it's linked with Bitcoin somehow.
I believe originally Hex airdropped every Bitcoin address. Like you could come claim Hex tokens if you had interacted on the blockchain, the Bitcoin blockchain previously. But I really haven't dove, like I said, down into it too deeply.
Yeah, I see CD here. Yeah, I never saw that these tokenomics near the project, but I will for sure go through it after this call. I cannot find the token allocation, by the way, in this document, but just to give it just to read about it. But yeah, I should read about it. Yeah, absolutely.
I would really love to hear like your thoughts on it and your analysis, because it's all I've seen. There's nobody who's in between on it. Everybody who, dives deeply into it either has a very good understanding of how it functions
Mm-hmm.
and understands why it does what it does and how it operates, or there's just people who understand the basics of it and go, oh, it's complete, shit. It's, Ponzi-nomics, but I
Mm-hmm.
haven't dove too deeply into it. I've seen it on multiple different YouTube channels of influencers shitting on it, and then literally months later, uh, doing a deep dive on what it is and the tokenomics, and then going, oh, you know what? I retract my previous statements about this. I understand this ecosystem now. And so, I've never really got a really in-depth understanding of it. So I would love to hear it from you,
Yeah,
um,
yeah, look,
whenever you do look into it.
absolutely. Look, when you are unsure or when you have doubts about the tokenomics, you have to ask yourself, is this token self-sustaining itself? Because if this token depends on the performance of something else, then this token has no real purpose. Okay, that's another reason why I don't like airdrop, because your airdrop depend on who gave you the airdrop. So if the airdrop is given by Yuga Labs, then then it's worth something. If it's not given by somebody, some entities or some project, that airdrop it's worth nothing. So basically what you have to do is make sure that this tokenomics is self-sustaining itself. So it's not depending of another project or another tokenomics, because the perfect microecosystem sustain itself in a way that these people generating the token, which is the team or the founder or whatever it is, they have to make sure that within the ecosystem they manage to give some sort of revenue to investors and also to themselves. But it is important to have some kind of balance. Okay, if the balance is toward the investors, well, it's not really good for your token control. Token control, it's nothing else than you as a team, you as a founder of the project, you should know how your token react to specific things. It can be from marketing, how it will react to your marketing, how it will react to the market sentiment, if it's a bull run or we are in a bear market, and how will react to the users. Okay, and so what is really important is making sure that you have this balance among investors and also the team, because if you are building something as a business, it has to make you money, and that's more than understandable. Okay, but at the same time you have to give back something to the investors, and if you see in this Hex tokenomics that is sustaining itself somehow, and if the ecosystem is giving some sort of revenue or profits to both of them in a balanced way, then it's a good tokenomics. And when you do not understand the tokenomics, my suggestion is do not buy the token, do not invest, just leave it there. Okay, you can go through it after 6 months when you have more knowledge. Okay, because this is how I got into tokenomics. Okay, I'm just going to make you this, to tell you this story of mine. I was investing years ago. I was trading. I was making profits, and I was also losing. Okay, like everyone else. And I tried to understand why I was losing. Okay, after making money, losing again, making money, losing. So I managed to understand quite quickly, and I'm saying about like 3 months it took me to understand that the problem was tokenomics. I never thought about it. I never went through the tokenomics of a project. I just bought the token, trade it, and whatever. Okay. And here's the thing. When you do not know how the token economy work, if you buy the token and then you fail your investment, you don't even know why you failed the investment. How it's possible that you lost the money in such a awesome project. Okay. And knowing the tokenomics is very important. And this is how I got into tokenomics, because I was like trying to find the reason why I was losing money. And once I got it, once I understood it, and it took me a while to be honest, I went all in, because into tokenomics, because once you understand something and you really like it, then you invest on that and you spend more time on that. So that's how I got into tokenomics. And so my advice is always, when you do not understand the tokenomics, do not invest. And also leave the tokenomics analysis at the end of the project analysis. That's also, as you can see in the documentation, when you go into documentation, you have the vision, you have what is the project about, how the project works, and at the end you have tokenomics for two reasons. First is, if you have it at the beginning and people do not understand numbers, it's gonna be hard to find investor, because a lot of Web3 investors, they don't really understand tokenomics, so they don't even look at it, so they leave it at the end for the experts ones. And the second reason is, when you develop your project, your token economy, it's the last thing you develop, because you cannot develop the metrics nor the economy if you don't have a project, if you don't have a protocol. Once you have the protocol and you know what you're gonna build, then based on that you make what I call a translation of your protocol into the token matrix. So you translate what is your utility and how the token works into number.
Very, very solid advice. I always try and preach to people to not get into NFTs if they don't understand it, and most certainly don't get into NFTs or crypto if with money that you can't lose.
Yeah.
And I unfortunately, I kind of learned that the hard way with a few things. I did, I did make out pretty well with NFTs and profiting, but, getting into crypto trading was rough. And I lost a decent amount of the gains that I made in the NFT market because I got into something that I didn't know and didn't fully understand. Mm-hmm. And that's something that I want to dive into more this year, is understanding tokenomics, understanding how different crypto ecosystems and protocols function, and things like that. So I have pretty much, I guess, a final question before we have our wrap-up questions that I like to end the episodes with. And that is, if you were to go and create a token right now, what would be the mechanism of distribution that you would choose and why? I know airdrops are, unless it's sub 1% of supply, completely out of the, I guess, question for you. How would you do it?
Yeah. So to answer this question, you have to ask yourself another question. And the question is, what is the biggest problem of the tokens right now? Can you think about it? The biggest problem, it's the same problem as we have in the Web3 space, in the financial, in the traditional market, is liquidity. So what you have to make sure when you build a token, that your token is liquid. If your token is not liquid, well, it's gonna die, because people cannot trade it, cannot buy it, cannot sell it. The second thing you have to make sure is that the demand of the token stays the same or increases over time. If the demand decreases, it's because of two reasons. One, you as a team, you as a person, you are not upgrading your project. And second, you are old. And so you move forward to another project which is doing better. So what I would do if I were to build the tokenomics, and I am doing it because I'm developing a DAO-driven AMM protocol, and I spent 500 hours in tokenomics development, and I managed to develop a tokenomics in which I am rewarding those who provide liquidity, those who stays in the project. So what you have to do is make sure that people do not leave. And in order to understand this, you can also think about NFTs. Okay, so let's pretend you have 10,000 NFTs, a collection. Okay, and on OpenSea, only 1% of them are listed. So what is this floor price volatile? No, it's not, because only 1% is listed. So this 1% is deciding the price. They have this kind of power over the buyers. Okay, so they decide the price. If there are 50% listed, well, the price is gonna be, it's gonna go up and down, and you won't be able to understand if this, what is the real value of this NFT. The same goes for tokens. The mentality, how it works, it's the same. The difference is just that one is fungible and the other one it's not fungible. And so you have to think it always this way. If you have a protocol, okay, and I'm gonna throw some number. If you have 10% of your token into circulation, and out of this token, 9% of the total supply is staked, it means that you have only 1% in circulation. So the demand is high because people want this token, okay, if you have the utility. If you don't, people are not gonna care, okay? So what you have to do is make sure to reward people, but at the same time, not reward too much. Because what happened is that people join only to get the rewards, the APR, okay? So, and also you have to, you need a backup plan. A backup plan is, what are you going to mint from the staking once the max supply is into circulation? Okay, so that's your backup plan. You have to make sure people are gonna stake. So what you do is give revenue back. You introduce governance. You introduce something to stimulate them to keep this token locked, or even just in their wallet. Okay, so what you have to make sure is that your token is liquid and that your token has demand. If you don't have those two, don't build a token.
Boom. Great advice. So then, before I do get into the last couple of closing questions, so since you don't particularly like how Collabland is doing their drop and whatnot, what would you have done differently had you built the Collabland tokenomics and were, let's say, head of tokenomics at Collabland?
Okay, so the only utility I've seen about this token is governance, and it's not even a utility if you think about it. Okay, so what is governance? Governance is rights to have your opinion, basically. So you create a proposal. Okay, here they have a DAO, so the holders create a proposal, and if the proposal goes through with the 51%, then the team has to develop, has to do whatever they want. Okay, and so what you have to do in this case is, because also they are looking for investors. Okay, and here's another thing I don't like about that tokenomics. It's that 25% of the allocation is for investors, partnership, and team. They don't say how much is for investor and how much is for partners, for one simple reason, because they don't know yet. So they are going to try to sell as much token as possible, okay, in order to get as much money as possible. Okay, for what reason? I don't know. It's not explained. But still, you can understand that the team doesn't have a clear plan in this case. So, first of all, for Collabland, I would have never made a token. There is no reason for it. Okay, you can give some reason for Blur, okay, because they have a marketplace, so you can use Blur for X, for that, blah, blah, in the platform, okay, but they don't really have a platform. So Collabland is offering a service to you. It's telling you, look, we have this bot. With this bot, you can do this, this, and that. Now I'm asking myself, why they need a DAO? So if I don't have an answer for it, I don't have a reason to buy the token, because the purpose of this token is voting in the DAO. So I personally, I wouldn't, launching a token for Collabland, it's a mistake in my opinion, at least based on the information we have right now.
Okay. And are you aware that they're going to be doing a marketplace of their own?
Yeah, I saw that. Yeah, absolutely. But here's the point. How many marketplaces are out there? What are they going to offer more?
Yeah, unsure. And I think
that's
from just purely from a marketing perspective, I could foresee them doing this airdrop as a way to essentially get the paper hands out, the people who are going to sell, the people who, because in order to, sell this token, it has to be purchased by somebody, right? Yeah. So in order for you to swap it, there has to be liquidity pools, correct?
Yeah, but in this case, there will not be any liquidity pool because there is no allocation for it. So the token will be listed on CEX for sure, because the team is not going to give. Because if I'm a team, I am not going to give a liquidity, so put my own money, because I have to put the token and also Ethereum, so my own money, into a pool that I know it will be drained. Blur, they didn't open the liquidity pool. So people had to claim from their platform and move on CEX to sell. Okay, so a lot of people think Blur never did $5. That's not true. Blur was listed at $5 on CEXs, and there was $17 million volumes between $5 to $1. So there was people buying and selling that token. Okay, but
absolutely, I was one of them. I was
yeah,
arbitraging that. Yeah.
yeah, you see, but
Yeah.
but in the DEX nobody did it because there was no liquidity. No, they opened liquidity like 3-4 hours later, and with one Ethereum, if I'm not mistaken.
So then, forgive me if I am misunderstanding liquidity pools. You, as an individual, can create a liquidity pool for a token yourself,
Yeah,
correct?
absolutely.
So, let's say 20 individuals
Mm-hmm.
create a liquidity pool for Collabland,
Mm-hmm.
fund it with 20,000 Ethereum.
Yeah.
Now there's a liquidity pool for this, and it's worth something. And then Collabland goes and says, "Oh, hey, we actually have a utility for this aside from governance, because governance is kind of like a pretty weak utility in my opinion, unless you're really, really passionate about that business and what they're doing, which most people are not." I was thoroughly confused with their tokenomics explanation and how they were giving it out. And I would be interested to know how you, as let's say a founder in my position, would do something with these tokens. I'm not sure if you've read through their community proposals and whatnot. We are in the top 100
Mm-hmm.
of communities, and so we're going to get allocated about 1 million tokens.
Yeah.
If it's not going to be worth anything, why would we spend our effort, distributing it to community members if it's not going to be worth anything or have any value aside from governance, which for the most part no one cares about?
Yeah. So the answer is with the question again. Who makes the market? Us. We do. We make the market, because I'm interested in buying and selling something. You are interested in buying and selling. So if I have to sell something, somebody have to buy. So two persons create the market. Okay, because there is interest over a product or a service. In this case, a product. So why I don't have any interest? Because I know how this token will perform. Okay, because I get a free token, and the first thing I do, I try to go and sell it on CEX. What happened with Blur will happen the same here. Tokenomics, it's the same. The difference is the percentage allocated to a airdrop. In this case, it's 15% of total supply. No, sorry, it's 25%, and for Blur, it was 15%. Okay, so here it's even bigger, the supply. Okay, and there will be no liquidity pool. So can you think about how the price action will act the same way? Because tokenomics is the same. It's just the allocation that's changing. Okay, and I know that the team doesn't care. Okay, even if the token goes down by 99%. Okay, because somebody will hold that token. Because when you trade it, it moves from hand to hand. Okay, so this is also a technique from the team and airdrop. It's used as, let's see who is really interested in this token, who is speculating on our project in the long term. Okay, but the point is, I will not do that, because what is important is the first impression you leave. Okay, whatever business you are, the first impression is important. And if the first impression is a dump, I will not buy that token, because you see liquidity get drained. CEXs, they earn from it because they earn for fees. Okay, so they don't really care about it. Okay, but who lose is those retailer who didn't get the airdrop and goes and buys the token from us because we get the airdrop. Okay, so is this fair? Somehow, for some people, it is, because we sustain the project. In this case, Collabland, we are one of the top 100 community and blah, blah, blah. Okay, but it's not a solid ecosystem. It's not going to work today. It's not going to work tomorrow. It's never going to work, because it's free money. And the price when you go to CEX, okay, the Blur price, who decided the Blur price at CEX? It was an agreement between the Blur team and the CEX. So they say, you know what, let's list it at $5. No, I don't like it. Let's list it at $10. Okay, so they don't really care. And once you list it, then what happens is you create the market cap, which is huge, because you have millions of tokens at $10. So the market cap is very huge, and people are, whoa, 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 this is very big. I have to buy this token. Retailers, this is how they get wrecked, because they buy something they think it's important because of the high market cap, and then the token goes down because there is no demand for it. Only people selling.
Interesting. Okay. I understand a lot more now. I'm glad we had this discussion, because I've been trying to really wrap my head around what they're potentially doing. I do see utilizing an airdrop like this as a great way to market and really grow your market share and your name and capture more market share, and then maybe do something with it that is actually of value and add utility to it aside from governance. I'm very interested to see how this plays out, because I definitely understand much more so now from your perspective on this, and I had a little bit prior to us hopping on this and recording this podcast, but now I understand even more. And it to me, it feels like, if you're going to develop something and put so much effort into doing this, do you think that there is going to be a further plan for this token and something else behind the scenes that they're not revealing? Because as a marketer, that's something I would do. I would hide something that's happening in the future to then create even more hype and more awareness about your project or business in the future when you do decide to do something on top of what you've already done.
Absolutely. This is how it works. This is for Blur example. Let's talk about Blur, since they already launched a token. Okay, so we don't really know what is the plan of the team behind Blur. Okay, so we got this token and we dumped it. Now the token is worth almost nothing. Okay, and here's the thing: the market works in cycles. So every time you get a pump and then a dump, and this is called reset. What happened during the reset is people get liquidated. People lose money during the bear market. Okay, so once you have the reset, then you can start building again. Now, when you launch a token with utility, there is a question you ask yourself as a team, as a founder: is this token going to go up? Is this token going to have demand because utility it's important? Do our investors really want to hold this token? Okay, so these are some of the questions founders ask themselves. Okay, when you provide the utility, day one. Okay, but when you don't have the utility, what you do is you deploy the token goes down, and here you have a reset. What happened after the reset? The token goes up. Whatever you give to this token, the token goes up. So now Blur token has already resetted, because now it's flat. Nobody wants to buy it. You don't really need it. So from whatever the team does, whatever the team is going to do or deliver, the token will start going up again. Okay, so that's speculation. That's an artificial dump made on purpose.
Absolutely. So then my final question before we wrap things up, because I want to be respectful of your time, and we're right here at that 55-minute mark. So Blur, in my eyes, did what LooksRare did, but just did it better.
Yeah.
And LooksRare had the same thing happen. They launched their token. Everybody absolutely dumped it. It kind of got some hype, and it went back up when they announced a few different things, and then it dumped to absolutely nothing. Mm-hmm. Do you foresee in, let's say, the next 90 days that Blur is going to absolutely tank? Or do you think sometime in the next 90 days, they're going to make some sort of announcement regarding the utility around it, what it's going to be used for, and its future use cases? Or do you really foresee that kind of not happening for a while?
Yeah. So on Blur, I'm doing what I call reverse analysis. So instead of analyzing Blur, I'm analyzing their competitors. And you see right now, OpenSea, it's in a bad situation right now. Okay, so they launched these new announcements, and in order to compete with Blur, because Blur has big share of the market right now. So when you have big brands like OpenSea that start feeling fear from Blur, in this case, Blur has potential. Okay, this is how it works also in the traditional market. When you have somebody that is new and it's going to compete with Apple start delivering new stuff, start making their product better than the competitors because they want to keep the liquidity, they want to keep people buying their product. So what OpenSea now it's doing, because OpenSea was sleeping, okay, I don't recall big updates from their end, okay, because they don't really need them. Okay, so when you are the leader of the market, you don't make update. You don't waste time developing. You do it once you have competitors with better idea than you copy them. That's not a problem. You just copy them, okay, and you bring the liquidity back again. So when you see something like this, it's because OpenSea has fear for that Blue is gonna take their market share. Okay, and in this case, you can perfectly understand that it's not gonna happen the same as LuxRave. Okay, because as you said, this airdrop was much better than the one from LuxRave. For what reason? Because you learn from the others, from the mistakes made by others. Now, the next marketplace that will come into the market and will come for sure, because there is always somebody learning from your failure, trying to make something better. Okay, so the next big airdrop will be better than the Blue ones. Okay, because you learn how they did it and you know how to do it better. Okay, so this is how it works basically. You always get something new, something done better. Okay, and I believe Blur, I never used it because I'm not into NFTs, but I like it. Okay, I love the way the design, I like the brand, I like how they are marketing it, and also I like the fact that the community it's very it's working together. Okay, also if you go on Discord you see some kind of activity. So I believe they have something, they have plans, but not sharing it is their go-to-market strategy.
Absolutely. I 100% agree. And I think the next big player in this market to do anything with a token is going to, it's going to be OpenSea. They're going to be forced to do something to recapture more market share, get more users back on their platform, and I think it's going to be an interesting battle to see, because after that, then what? You know what I mean? Like, then what? Yeah. Tokenomics is not innovation.
Yeah, exactly.
Just pure. I'm not like dissing tokenomics, but I'm just saying tokenomics in and of itself, just to capture market share and bring users, is a marketing strategy. It's not a utility, and it's not something that intrinsically brings value to the market, aside from market share and trading volume.
Yeah, here's the thing. You use OpenSea, right?
Yeah.
Have you ever thought, having a token would help me somehow?
No, absolutely not.
Exactly.
I specifically, almost every day that I use OpenSea for the past 2 years, have said, damn, I really wish they would innovate and create something that allows you to actually trade quickly on this platform, so that you don't have to go use 28 different trading tools just to flip an NFT quickly. Maybe there's something there, OpenSea, but no, they just keep doing nothing. So
yeah, the point
now
is
they're forced to do something.
But if you think about it, and this is also for the listener here, if you are trading on Ethereum, your NFTs, you use Ethereum or you use stablecoin, for example, for one simple reason, because the price of this token is very volatile. You don't want to use some non-liquid token to buy stuff, okay? Because if you, as a seller, you place an order and the token goes down, well, somebody's gonna buy your NFT and while you are sleeping, okay? So if OpenSea were to launch their own token, they have to make sure they have liquidity compared to Ethereum, which is not possible because they are not gonna deliver an ecosystem better than Ethereum because they don't really need that. It's a marketplace. When you go on your marketplace, okay, when you go to buy grocery or whatever, you don't use the token or the currency of the grocery shop. You use dollar because that's more liquid. And they want dollar because it's more worth it. Now, OpenSea, even if they were to create their own token, they are not going to hold their own token. They are going to hold Ethereum because Ethereum is more worth than their own token. So having a token for OpenSea right now, it's pointless. What they have to do is improve the UI UX. Once they do this, it's gonna be much better. Now, Gigamart. I loved it. It's very clean UI UX. The dashboard was freaking cool. Okay, the fact that you can chat with NFT holders, non-NFT holders, and whatever, that was sick. Okay, unfortunately, it's not gonna have the same success as OpenSea because there are no big investors behind it. Okay, so sometimes you have better product, and you know you do, but you don't have somebody backing your ass up. Sorry for the word.
I will. No worries. I will say one thing though. I am hearing internal murmurs and rumors and discussions about who is actually behind Gigamart. I can't say any names because I've been told not to say any names, but I think they will actually become a very interesting competitor if they continue marketing how they are and continue delivering a good product to the marketplace. It's going to be interesting to see how they capture market share here in the coming months. Dude, Mark, this has been an amazing episode. I would love to have you on for another episode after OpenSea drops their token, whenever they do that, because they're probably going to do that. And also after Collabland drops their stuff and we see what happens. I'd love to have you back on, discuss this again, and
sure.
maybe dive into Hex and the tokenomics of Hex and anything else. But dude, it's been an absolute pleasure. I love ending the episodes by asking one final question, and then I'll give you the floor to introduce people to how they can follow you and whatnot. But the final question that I like to end the episodes on is, we have talked so much and you have talked so much, giving us your knowledge of, tokenomics and the market and how these things work, but we haven't really got to know Mark. Tell me something about yourself that you want to share. It could be a hobby. It could be your worst NFT or token trade of all time, the most, anything you want to share.
Yeah. I have a lot of stories to share these 7 years. I would share the one that I was awake for 3 days trading Ethereum. Okay, I'm talking about the last bull run, or the best trade I ever did when I bought Bitcoin at 9.5 in 3x leverage and sold at 42K. Or I could say the time that I got on Binance, and this is true. Nobody believes me, but this is true. I was on long Ethereum. Ethereum was dumping and I had my long position in 3x by minus 119% and I didn't get liquidated. That was a bug from Binance. Okay. And I stayed negative. I stayed for 5 freaking days and the price went up again and I closed in BEP.
Gosh, my heart just sank into my stomach hearing that. That is insane.
Yeah.
I am super happy you did not get liquidated on that. Crazy Bitcoin trade. That's amazing. Go ahead.
I could talk about the first time I interacted with CEXs. I lost $500 in 20 minutes because that was the first time. I had no idea what happened. I I never knew what happened, to be honest. I think that was some kind of sort of liquidity because I bought some bullshit token that was a test for myself like 2 years ago or something like this. And I hate it. I was really mad at it because I lost money without knowing how. Okay. So I had a lot of experiences, with, I also enjoyed this investing with friends, especially because that's how I joined the space. I sold the golden necklace to join for Bitcoin, and Bitcoin was $200 at the time. And I got 5 Bitcoin for a golden necklace in 6 months. I lost 4 of them, and I hold the only one I had. I was 17, man. I had no idea what I was doing. I had no idea how the economy, financial work, or whatever it was at the time. I had no idea. So uh, the crypto space gave me the opportunity to learn, and mostly it gave me the opportunity to live by myself, the opportunity of being a self-employee, the opportunity of deciding myself when to work. Because when I wake up tomorrow, I decide when to start my computer. So being independent, for me, it's the best thing about the crypto. It's because you decide when to work, you decide what to do, you decide how much to do, and also crypto gave me the opportunity to travel around the world. So that's the freaking awesome for me. Okay, every time I think about it, it's very important. But what it gives me more opportunity was into learning how the economy works. And I also, in 1 year, I developed my business model for MHL Solutions, and I'm really proud of it. I'm making update every day, learning from something, taking it to me and upgrading it and making sure that people understand what I'm doing, first of all. And also I want people that learn something from what I do, because one of the main purpose of MHL Solution is educating investors, because that's the biggest problem of the blockchain industry. It's not the technology, it's the people, because we are using it in the wrong way. So education is very important, because I know by experience many people joining the crypto space and losing money at the first time because they don't know how to make a transaction, or they don't know how to save the seed and whatever. Okay, so it is very important for us to educate you guys, and at the same time we have a business, so we have to make money. So we are looking for jobs. In this very moment we have a loyalty program going on, so if you bring us any kind of jobs, we can handle it. We have a lot of partners that we can deliver these opportunities, these jobs, and you get 20% of our commission fee.
That's amazing, dude. I resonate with a lot you just said about, having the freedom and to be able to work from wherever, whenever. And it's an amazing responsibility to have. And I love it every day. I can only imagine what it is like to build tokenomic systems for people and create little mini micro ecosystems. It's a very intriguing thing to me. I will be closely in touch with you over the next couple months, and hopefully have you back here on the podcast sometime soon. Mark, it's been amazing. Thank you, everybody, for listening. If you are interested in getting connected with Mark and MHL Solutions, you have some business to bring him, or just want to learn more about what he's doing, I will put everything that is related to him in the link in the description or the podcast show notes below. So if you're interested in getting in touch with Mark, finding out more about what he's doing, and connecting with him, all his information will be in the description. Mark, it's been an absolute pleasure to have you on. Thank you for taking the time to show up and bestow upon us the knowledge of tokenomics. Everybody who listened this far, thank you guys for listening. And we will see you on the next episode.
Thank you so much, Adam. Have a good one.